All right. Good morning, everybody. So we got a lot on the table today. Most of it's going to be in the morning, though. I think by the afternoon we should be pretty clear. Other than the auction at 1 o'clock, it's kind of a big one too. So want to pay particular attention to it. World markets, everybody's down around the world. Europe 1%, small caps 3/4. It's kind of leading us on the downside. NASDAQ down the least with the US names, about 1/4%. We're going to get the second reversion of the GDP numbers this morning. Now, the numbers are really close together, so unless we get an outlier, this shouldn't be an issue. But man, GDP can really move things, and it's kind of a sleeper. A lot of people don't talk about the GDP numbers. They don't really watch them when they come through. Not a lot of websites highlight that we're going to be getting the numbers. And then when they do hit, it's a little bit of a shock and awe and freaks everybody out. So that one's coming in with PCE data and just a lot of other stuff piled in there together. The jobs data is always important, goes to the heart of the Fed and the dual mandate and whether or not we get hikes or cuts or anything at all. So whenever there's jobs data, always want to pay particular attention to that. So 830, really big deal. The inventories numbers don't look far off. Again, this shouldn't be an issue unless we get some sort of shock and awe number. And then 1 o'clock. So 8:30, 1 o'clock. Those are your two biggest times. Get past that. Everything else should be fine. There's been a lot of talk about this ceasefire or truce, and yet, from what I can tell, there's still shots being fired and no firm agreement yet. So be careful if that unravels. There's still a lot that we don't know, and so just be cautious with what you're trading or thinking about trading, because there's still a risk that it all just unravels. CoreWeave and Meta coming up with something, and CoreWeave just offered like a boatload of note. I put it a little chat here somewhere. 1.25 billion in senior notes is what CoreWeave plans to issue. So, if you caught that run yesterday in Meta and was thinking, you know, that you were gonna play these two, just be careful. So every day we've been trying to figure out what's going to move the market today, right? As we do every day, the main driver usually is one thing and it stays with that thing all day. Market breadth, dealer positioning, 0-day flows, the VIX, crude. It's usually coming from one direction. And that hasn't changed. We're always trying to figure that out. But recently it hasn't been market breadth, right? It's not the Mag 7 that's moving markets. It's not the broader equity market, 0-day positioning, any of that, right? It's been crude and VIX. Now you can get, generically speaking, not just crude, but commodities in general, or you can get into treasuries and bonds, FX markets. Those are your biggest impact right now. It's easy just to default to our regular approach, watching the Mag 7, looking at the tick and the AD, but that's not going to get it done right now. So you need to keep your eye on the VIX and crude. They're going to be your biggest tells. White House risk is at 10. If this changes, I'll let you guys know. I didn't see anything that really stood out. A lot of things that are just closed press, and that's not really going to be an issue for us. SPX 6743 puts us above this level, which is 6700. And in front of this level, there's 6740, there's 6750. So if we try to make a move to the upside, we got this big level, and then past that, 6800. We want to look at where the ES is going to open. If it's going to open up, then so will the SPX, and which means we could jump this 6750. But if it opens down, drops us below this 6740 level, and then we try to make a run to the upside, we're going to have to fight through the 6740 and then the 50 before we can make another run at that 6800. To the downside 67, then we drop down and we're on the other side of things. We're back here. That is the SPX, but the ES is going to give us a clue on where the SPX is going to open. The call wall did roll back up. It was a one-day wonder with it being down as low as it was. So 69.40 again. If you've gone over to Spot Gamma, they have a free FAQ, right? It's a support section. You can ask it questions about all of these different levels: zero gamma, volatility, put wall, call wall. And you can also ask about these other lines. The other lines are actually more commonly interacted with on a day-to-day basis. Price usually isn't at the call wall or the put wall. So those are the ones that everybody asks about because they have a name, they're easy to remember, but more often than not, we end up getting tangled up into the combo lines or the high gamma lines. You can go to Spot Gamma and you can read about that. It's free, right? It doesn't cost you anything. They want to explain it to you because, well, they want to sell you their product. And if you don't know anything about their product, why would you spend any money, right? So, of course, they explain all this stuff for free. All you have to do is go to their website. There's a lot of things over there that you can learn when it comes to using these levels, why they're made, how you can use them, all free. So go check it out. 6844 is one of those levels right next to the 6841. So they're making a little bit of a channel up there. It's close to yesterday's high. If we make a run to the upside, we're going to have to fight through that level. Otherwise, 6792, the level down below, it's the Globex low. It's a cog line. If we can break our Globex low, we'll challenge yesterday's low. We can begin, well, yesterday's RTH low. We can begin the expansion to the downside, try to get that gap closed. 95,000 in the overnight. It's a bit light compared to what we've seen in the last 2 months, but it's still heavier than our typical average. The average runs at around 50,000. So we have market participants for sure. They're just not as heavy as they have been. And of course, we're still above all the major moving averages. 310, 20, 50, 200, we're above them all. The main thing that I tend to watch for is how far away are we from that 3-period moving average? Because that thing is a low number, right? It's a 3. It keeps up with us a lot. And when we outrun that, then we know we're running too hot. We're not able to sustain that forever. We did get that bull surge that I talked about last week when price crosses through the 10 and then brings the 3 through the 10. But we have to expand beyond the 10 far enough to get that 3 to stretch beyond the 10. So once we crossed the 10, we got stuck there for about a week, just hanging out sideways, building up energy, and then we had the explosive move. If we get a fade to the downside right now, coming back and interacting with that 3-period moving average is kind of my base case. It would be around 67.50, and it would also be near the midpoint of yesterday. Kind of get the idea, right? 67.50, the midpoint. It's really close to that 3-period moving average. And we can wick through it, of course. It's not a support or resistance level. It's more of a line in the sand of where are we. So don't expect it to hold up price or do anything like that. And that would drop us back through the 50 and the 200. Now, the context behind that is whether or not the broader market is bullish or bearish. And when we're at that level, we can just cross back and forth, right? Just hovering in a zone around the 50 and the 200, and we can get stuck there. We got in that area before, and we just hung out there, right? Back and forth, back and forth. So that can happen again. While it doesn't feel very good on a day-to-day basis, it is a metric designed to help the market heal after big moves have been made, right? Big moves rip things and break things. If you tried to have a workout regime over the years and tried to build muscle, they teach you have to rip your muscles, right? That way you have all these fiber strands, and that's a part of muscle growth. When markets move really fast, they rip things, they break things. It needs time to heal after a move like that. Going sideways gives the market time to do that. Of course, going sideways also gives the market a chance to build up energy, right? We've learned that long ago. So we'll see if we get that sideways nature around this 5200 like we did last time, or whether or not we're just going to wash it out. The midpoint of yesterday right now is my level of discern. We break that level, I'm looking to get back to where it all started. That should bring us back to the 10 and the 20. If we can hold the mid, then we can keep the whole thing. At that point, we'll be looking for a higher low to be set, and then we'll look for a new higher high. Drew that box yesterday as the range that we could possibly trade in. We didn't have the RTH at the time, right? It was in the morning briefing. But it worked out. That's still the zone that we're playing in now. But to make it easier, focus on the RTH low, 67.80. It's what we want to keep our eyes on. If we break that low, we can get to the ADR half, 67.50. It's a nice 30-point move. Get below the red line, aim for the yellow line. That's pretty simple, right? If we get through our Globex high, then we want to challenge the RTH high of yesterday. Although really it's close enough you could just take the whole high of yesterday. $68.36 or $68.47, whichever one of those you like. It's possible that we really don't see a response in the RTH high and that you're better off just using the full high. but I won't ignore a pivot point. So knowing that it's there, I'll look for it. We responded quite a bit to the RTH Open yesterday. We tested it multiple times and it held as a rejection point. So 68.32 cog line is really close to that RTH Open. You can see the level where it is. Mark that open. If we get back up there, it's likely we see a response at that point. That's a sleeper level that a lot of people don't pay attention to, and then it comes back to bite them. Yeah, I figured we'd get into that. We haven't got there yet, Jay. You've already got all your work done. What time did you get up? 2 o'clock this morning? No rest for the wicked. We are nowhere near either ADR line, which makes sense because we're basically flat this morning. We're down 0.25%. That's much of nothing. So at the start of the week, we had talked about this week very likely being a hurry up and wait mode situation as we look towards Friday and the big economic data on the table. Of course, there was headline threat risk, and that's what propelled us up. But once the initial push was done, we went right back into sideways mode. Now, I've got this sneaky suspicion we're just going to wash it all back out, and I wouldn't see it as bearish if that happened. That would just be unwinding the headline and putting us back where we were before it happened. But otherwise, it would not surprise me at all if we stay inside this zone into the Friday data point. I know that's not an overly exciting idea, but um, the midpoint of yesterday, all the way up to yesterday's high, very likely could be everything we've got to deal with between now and the end of the week. So 67.50 up to 68.50. It's not bad. It's 100 points, plenty of room. It would be this lower ADR, and that fits because, like I mentioned, going down to the lower ADR isn't bearish either, right? That's just a part of wave movement. All right, today's floor pivot higher than yesterday. That's bullish. Price opened above it. That's bullish. Yesterday was a MDP. It's a missed daily pivot. And so far today, we have a missed daily pivot. Now, today's doesn't count yet. We have to get through the entire day and then look back and realize that we didn't hit it, and then we can count it. The value area, the midpoint of yesterday is the channel low. The Globex low is the channel high. So we're interacting with those levels at this point. The floor pivot is close to yesterday's RTH low, but we will have to overshoot that low to get to the floor pivot. We're still a long ways away from the weekly pivot, and because of that distance, I have a hard time believing that we can get above 68.50 this week and keep that without some sort of headline like what we could possibly get Friday at 8:30 in that data print. So just regular price action today, it's not on the table. A headline today could do it, whatever kind of headline, it's going to take something, right? A macro trigger to get us up through 68.50, kind of like how we got up through 66.50 down here. Something that's explosive enough to push us through that level and extend us far enough to the upside that we don't retrace it and come back down again. It would be one hell of a headline, whatever it's going to be. So, you know, at this point, I'm pretty comfortable with the idea that 68.50 is our high, and we're done going up and closing higher than that until tomorrow's Friday 8:30 data print. So for some 0-day trades, however you want to monetize that, I don't think we're going to close above 68.50 today without headlines. All right, we mentioned it yesterday. We're building out that second distribution. Now, they don't consider this a B, capital B shape profile, right? If you've learned about these profiles, there's a lowercase b and there's a capital P, but there is not a capital B. When you do end up with something that resembles a capital B, it's just called a double distribution. So we're working on that second distribution right now. You can see the shallow area. It's really obvious. If we break this structure low here, we should move through the shallow area relatively quick. We moved through it on the way up very swiftly, and even though I've marked out 67.50, there's nothing there other than the fact that it's an options level, and we could very easily just run right back down through it again. It is the mid of that run too, so that, I mean, there's a few things at 67.50, but what there isn't is any footprints. We like tiptoed through the sand in that one. We didn't leave anything behind. If we do get back below 66.50, we've got a lot of structure in that 50-point zone between 6,600 and 6,650. So we got a lot down here to hold us up now that we finally made it through that zone and we're above it. We need to keep it. Getting back below 6,600, we're going to start running 50s again, and we'd be expecting 65.50 and then 64.50 and then on down here to 63.50. So we really don't want to cut back below that 66.50 or 6600, all that structure that's down here. Now to the upside, there's really not a lot looking back that could help us out to the upside. We have this one spot, 68.70. I've marked it out before. It's this point of control from the first week of March. And we challenged that level the very next week. We wasn't able to keep it, and we just washed out from there. Well, we're getting another run at it. So if we continue this drive to the upside, we do need to watch that level. $69.32 is another level. If we do get past that one, we cut through it. It's not like it's an untouched zone, but we wasn't able to keep it, and we put higher highs into it and then lost it. And then that 70.15 level. Now that one really, it's a long ways off. We're not going to get there today, but you should still keep it on your radar. So those are the levels to the upside. You can clean it up, of course. You know, I like to just use round numbers. Don't need the ticks behind it. But you do you. And none of those should be on the table without headlines or some sort of macro trigger to get us there. $10-day, 30-minute volume profile in TPO. You can see the shallow zone is pretty obvious. We're building out the new levels. That will become our new point of control, that 6,800 zone. It's just going to take time. So the question at this point is, will we put in enough work over the next 2 days, maybe 3 days, to bring that point of control up on its own? Or are we going to have to hang out here until we start wiping these candles off the board? We're going to lose these in the next 48 hours, but it's likely that losing these isn't going to be enough. We need to lose these. And that's going to take a whole other week plus some before we start working through those candles. So the race is on to see which one happens first. If we don't put in a lot of volume up here, then eventually, by default, the point of control will move up on its own in about 2 weeks. If we put in enough work, we could move it up there in the next few days, just dragging it, kicking and screaming if that's what it takes. We still have that March 10 VPOC overhead and the April 7 now below us. We don't have a new VPOC from yesterday. You can see that yesterday's point of control lines up with our value area high. And yesterday's got a really large value area for that move that we had to the upside, right? That box that we were looking at. Yesterday, what I drew in the morning briefing was a smaller box. It was using that low right there and that Globex high. So I would stick with that. 67.92 cog line on the downside, 68.50 on the upside. That's a legitimate box right there, and I would run it till it breaks. But inside that box, you do have yesterday's value area and all of this structure. It's not a lot, but take what you can get. Now, yesterday's point of control is not a VPOC, but it is a point of control of high value. So I would keep my eye on that level. Right now, it's our own Globex value area high, but that's going to shift through the morning, and then that value area line won't be there. So you might want to just mark it out. It's 68.15. Keep that one on your radar. If we make a move to the upside, we're going to have to get through that level, and that could prove difficult. So we talked about overbought and oversold and whether or not we had moved too far too fast yesterday. 2.5% above the 10-day moving average is significant. It's not often that we get 2.5% and then go even higher from there. It's very rare for that to happen, actually. Typically, we get there in our first hurrah, and then we either hold the line or we wash it back out again. So far, we've washed it back out again. We're below that 2.5 level. But if you look at what we've done in the past, we've gotten there before and then held the line. We don't generally hold it for very long, a day, maybe two, and then, we lose our grip and fall back down again anyways. But the idea that we could have gone 2.5% yesterday and then gone even further today is so rare I can't even show it here. I would have to add like another couple of years and dig back even further to find something like that. And it's because of the reason that I explained yesterday, right? The 10 moves every day, and we move every day. We would have to move more than the 10 is going to move to be able to keep that 2.5% level and then, exceed that even more. And if we make a big move, well, the 10-day is also going to make a big move. So it's almost impossible. I believe it has happened, but it's very rare. That becomes important when you're trying to figure out where your out of the money stuff should be, right? I'm not a big fan of trading the out of the money stuff, but I know it's popular. All right, looking at the 10-week, we're back above the 10-week. That's a good place to start. We're nowhere near overbought or overextended. We haven't moved too far too fast, and it doesn't owe us any sort of pullback or mean reversion at this point. Not on that higher time frame. Now, I've been tracking this hopeful crossover for half a year, right? This idea that we could eventually start breaking out above these previous lower highs. Maybe this is finally going to be the run and we'll break this level and then eventually this one and this one. But right now, just getting back above zero is a really good start. We want to keep that. 2.0 is a nice, healthy level. Getting back beyond our 10-week moving average, getting past it by at least 2% would be a good, healthy place to be. So we're not quite there yet. We're getting close. Being back above zero is a good place. Back above 1% is even better. We need to keep all of this. We don't want to drop back down below 1% or we'll be too close to the 10-week. And at that point, we could just come right on back. We can wash out 1% pretty easy. There is still the problem with the weekly expected move. We're supposed to close inside this box 70% of the time. For those who are challenged by math, we expect to close inside that box 7 out of 10 times. So if you just count back the last 10 weeks, how many weeks did we close on Friday outside of that box? Now, me, I don't count broken weeks like this one when we did the contract change. The indicator is broken. We get these scrunched up lines. Well, we can't count that, right? Just let that one go. And I don't like to count short weeks. Like, yes, last week was a short week. Still, you do you, however you want to count things. And I've made different versions of this indicator. The indicator is not mine. Mobius made it. But I took his work and I added to it. I added things like a breakout counter. How many, you know, it counts back X amount of weeks and asks, did we close outside on a Friday? You'll find those in the Thinkorswim workbook. You'll find that Thinkorswim workbook in the share link that got you here today, or you can look at the description from the YouTube recording. Speaking of, one of my goals this year is to grow out my YouTube channel. Someone challenged me to do it, and I don't know, I kind of appreciate the challenge. So guys, help me out with that YouTube channel. Like, subscribe, share it with your friends if you think someone could use it, and I don't know, make a comment down in the comment section. The charts that I use in the morning briefing, you'll find them there, and I added TradingView charts where I could, right? TradingView doesn't have all the options data that we have here, so I don't have all my charts for TradingView, but what I have, they're on YouTube in the description. So check them out and help me out while you're there. All right, looking at what's down this morning. China, solar, uranium, robots. China again. Really, it's almost all China. If we get down into areas that isn't enough, we can see that banks and chips are down. My benchmark is 0.5%, so they're not down enough, but they're down. And airlines, quantum, UFO, there is a lot that is down. So should be pretty easy to spot if we see it turn around. And it should be pretty easy to spot if they continue to push. The thing is, as I mentioned at the start of all of this, the market breadth and the regular like 0-day flows, dealer positioning, that sort of stuff hasn't really been the driver. It's been the VIX and crude, which makes sense. But every day we've got to ask what's moving our markets today. And we can't just assume that it's going to be dealer positioning and options flows and 0-day stuff or market breadth. A lot of times it usually is, right? It's usually the Mag 7. If they go up, we go up. If they go down, we go down. That's not hard to figure out. But we're not in that environment right now. So we want to keep our eyes on these things, but we also need to have the expectation that these things are not going to be the drivers that's moving the market for the most part. It's probably going to be crude and or the VIX. The Mag 7 up volume is up this morning, and junior gold miners are up this morning. That's really about it on the upside. Not a lot, right? Nothing really there to help us out. It's the econ today, guys, especially that 1 o'clock auction. Don't sleep on that one. Most of the time, those auctions, nothing happens. And then I get questions from people saying, why do we keep looking at these auctions? Nothing happens, nothing happens. And then, well, one day something happens. Those auctions are sleepers. Weeks and weeks will go by, nothing happens, and then you get one of them that just rocks the market. And the 30-year, it has a history of doing just that. And that's what we have today at 1 o'clock. So watch that one. Otherwise, with Europe being down 1%, keep your eye on Europe as we get into the close. So keep your eye on that. Otherwise, guys, be careful, be safe, have a good day. I'll see you all tomorrow.
Recording stopped.